Welcome back to Investing Talk Podcast. We're going to be looking at Bloom Energy today.
Bloom Energy.
You gave us a bunch of information on Bloom Energy.
Yeah.
Our goal is to kind of distill it down to the key insights. For you, the learner who wants to understand Bloom Energy quickly and thoroughly without feeling overwhelmed.
Right.
So we've got financial metrics.
Yeah.
We've got business factors. We've got management insights and recent developments.
Like a holistic view.
Holistic view.
Absolutely.
So let's unpack it all and see what makes Bloom Energy tick.
Let's do it.
Okay, so let's start with the financials. In 2024, Bloom Energy brought in $1.47 billion in revenue.
Wow.
Which is a jump from $1.33 billion in 2023.
That's a pretty sizable jump. I mean, we're talking, double-digit revenue growth.
Yeah.
And what's interesting is that analysts are predicting this trend to continue, potentially reaching $1.67 billion by the end of 2025, and then $2.03 billion in 2026. So that sustained growth in a sector that requires significant upfront investment, often points to strong market validation for that core technology, which is a key indicator for those looking at the long term.
Yeah, that revenue growth definitely catches the eye. Now, when we look at earnings, the EPS was negative 0.13 in 2024.
Okay.
While still negative, that's a significant improvement from negative 1.42 the year before.
Yeah, absolutely.
Quite a turnaround.
Yeah, and to kind of connect that to a broader view of their financial health, they also generated a substantial $484.2 million in cash flow from their operating activities in the last quarter of 2024. So this suggests that they're getting more efficient in their day-to-day business, which is really important as they aim to become profitable.
So no PE ratio yet.
Right.
Because they're not profitable according to GAAP.
Exactly.
But those other numbers look pretty encouraging.
You do, yeah.
Now, their debt-to-equity ratio is around 227.2%.
Yeah. That's a lot.
That seems like quite a lot. What should we make of that?
Well, this brings up an important point. While revenue is growing and cash flow is improving, having a high debt-to-equity ratio means that they have a considerable amount of debt compared to what the shareholders own in the company. This isn't necessarily a red flag for a growth-oriented company that is investing heavily, but it's certainly something that you'll want to keep an eye on as they continue their expansion and strive for profitability.
Yeah, that makes sense. So for those who might be newer to the company, can you give us a quick overview of what Bloom Energy actually does?
Sure. Bloom Energy is essentially focused on creating cleaner and more reliable ways to generate electricity and hydrogen using what's called solid oxide fuel cell technology.
Yeah.
Their primary products are the Bloom Energy Server, which generates electricity, and the Bloom Electrolyzer, which produces hydrogen. So think of their energy server like a very efficient and clean on-site power generator that uses a chemical reaction rather than burning fuel directly. Okay.
Which can lead to greater reliability and potentially lower emissions, especially when using cleaner fuels like natural gas or even hydrogen in the future.
Okay.
These systems are particularly useful for places that need continuous dependable power like data centers.
Yeah.
Or for creating microgrids in areas where the traditional power grid might not be as stable.
Right. And they're not working in isolation. I recall seeing some pretty big names associated with them.
Yeah, they've established some significant partnerships with major global players such as SK Ecoplant and ENGIE. And, these collaborations are crucial for them to expand their market reach and implement their technology in a variety of projects around the world. For example, a partnership with an energy company like ENGIE can help them deploy their servers in new geographic regions.
So in a competitive landscape, what sets Bloom Energy apart?
Yeah, that's a great question. What's particularly noteworthy is their core solid oxide fuel cell technology itself.
It's often considered, a leader in the fuel cell industry, particularly for those demanding applications, like ensuring uninterrupted power for data centers, or providing more resilient and cleaner energy for manufacturing plants. And the increasing demand for sustainable and reliable power, especially for energy-intensive applications like AI and the overall electrification trend, is a significant driver fueling their growth. Their technology can operate on a variety of fuels, offering flexibility as the energy landscape evolves.
Okay, so we understand the technology, we understand market drivers. Who is leading the company?
Right. So at the helm is K.R. Sridhar, the founder and current CEO, who has a deep and extensive background in energy technology. And then on the financial side, the CFO is Dan Berenbaum, who brings a wealth of experience in financial management, which is vital as they work towards achieving sustained profitability. So this leadership team has been guiding the company through a period of significant expansion and technological development.
Now, looking at recent events, have there been any notable achievements or strategic moves that stand out?
Absolutely. So if we look at their most recent performance, they reported record quarterly revenue of $572.4 million in Q4 of 2024.
Wow.
To put that in perspective, it's a substantial increase from the $356.9 million they reported in the same quarter of the previous year. So looking ahead to the full year of 2025, they're projecting a revenue growth of around 19% with an estimated range of $1.65 billion to $1.85 billion.
That's a strong growth outlook. And it's not just about future projections. They're also securing real-world applications for their technology.
Yeah, exactly. So a significant recent development is their partnership with Conagra Brands.
Okay.
Bloom Energy's fuel cell technology will be implemented at one of Conagra's production facilities in Ohio.
Got it.
So this is a concrete example of a major industrial user adopting their solution for its power, needs highlighting the practicality and benefits of their technology in a real-world setting. Additionally, an investment firm, TrexQuant Investment LP, recently acquired a new stake in Bloom Energy valued at approximately $13 million in the last quarter, which indicates interest from institutional investors.
Interesting. So how has all this translated into the performance of their stock?
Right.
What's been the recent trading activity?
So Bloom Energy stock has seen a fair amount of movement over the past year, with its price fluctuating between a low of 9.02 and a high of 29.83. It recently opened at 21.27. This kind of volatility is not uncommon in the renewable energy sector and can reflect a variety of factors, including overall market conditions and investor sentiment towards growth companies.
And what are the analysts saying? What's the general consensus on Wall Street right now?
So currently the general sentiment among analysts is a hold rating for the stock with an average price target of 25.06. A hold rating often suggests that analysts see potential value, but may be waiting for more definitive signs of sustained profitability and successful management of their debt before issuing a more bullish rating. And the price target gives an indication of where they believe the stock could trade based on their analysis.
Okay. Zooming out to the bigger picture, how does Bloom Energy fit into the broader trends we're seeing in the energy sector?
So Bloom Energy operates in the very dynamic and rapidly growing clean energy sector. And their solid oxide fuel cell technology strategically positions them as both corporations and governments globally are increasingly focused on achieving, significant reductions in carbon emissions and ensuring energy resilience. While we don't have, specific recent moves of every competitor in our immediate materials, the clean energy space is undoubtedly becoming more competitive, attracting significant investment and innovation across various technologies. Bloom Energy's focus on distributed generation and hydrogen production aligns well with the overall direction of the energy transition.
What are some of the potential challenges that Bloom Energy might encounter, and what are their key strengths as they look to the future?
Well, some potential hurdles for Bloom Energy include their level of debt, which we've discussed, and the inherent uncertainties associated with evolving energy regulations and government incentives that can impact the adoption of clean energy technologies. They also rely on specific suppliers for key components, which introduces supply chain considerations.
Yeah.
However, on the other hand, their innovative and increasingly proven technology, their expanding network of strategic partnerships and their strong focus on rapidly growing markets like data centers, which have an ever-increasing demand for reliable and cleaner power, represents significant strengths. Their move into hydrogen production with their electrolyzer also opens up a significant future growth area.
How does Bloom Energy compare to some of the other prominent companies in the renewable energy space?
Sure. In the wider renewable energy landscape, companies like Plug Power and Enphase Energy come to mind.
Yeah.
While all are contributing to a cleaner energy future, they have different areas of focus. Bloom Energy's strength is really in this area of distributed generation and hydrogen production, using their unique solid oxide fuel cell technology, which sets them apart in providing on-site cleaner power solutions. Plug Power is more heavily involved in hydrogen fuel cells for mobility and industrial applications, whereas Enphase Energy is a leader in solar energy inverters and energy storage solutions for residential and commercial use. Each plays a vital but distinct role in the overall transition to a more sustainable energy system.
So if our listeners are following Bloom Energy, what are some of the key things they should be paying attention to moving forward?
Looking ahead, it'll be important to monitor any new developments in their product offerings, particularly in their core solid oxide technology. And the growth of their electrolyzer business is that's going to be a key area in the developing hydrogen economy. Their future earnings reports will be crucial in assessing their progress towards sustained profitability and understanding the trajectory of their growth. Additionally, any shifts in government policies related to renewable energy and the broader economic conditions will be important external factors to consider that could influence their business and the wider sector.
So to recap for you, the learner, Bloom Energy is demonstrating significant revenue growth and is making strides towards profitability, driven by their innovative fuel cell technology and the increasing demand for cleaner and more reliable energy solutions. Their strategic partnerships are expanding their reach, and their technology is finding real-world applications in crucial sectors. However, their debt level and the inherent volatility of the renewable energy market are factors that warrant continued attention.
Right. And what's particularly compelling is the way their technology aligns with critical infrastructure needs, such as providing resilient power for data centers and their expansion into the hydrogen production market, both of which are areas with substantial growth potential in the coming years. This leads to a key question for you to think about. How will Bloom Energy effectively manage its growth ambitions and its current debt obligations in a potentially dynamic and evolving economic environment?
If this closer look at Bloom Energy has sparked your interest, be sure to subscribe, like, and comment. We're always looking for your input on what areas of the market you'd like us to unpack next.
Great.
Thanks for joining us.
Thanks for having me.
See you next time.
See ya.